Morning, good afternoon, good evening, depending on the time you're watching this video. My name is Enwo Henry, the CEO of Juve Trades. I am happy to be with you today. And today I will be teaching you on the principles of day trading boom and crash. The principles of day trading boom and crash. I'll start by first defining who a day trader is. A day trader is somebody that can allow an open trade to run for a minimum of 1 hour. In other words, one particular trade can run for a minimum of 1 hour. That is a massive period of trading. In other words, you don't just run in and jump out of the market. Yesterday when we started, I talked about on the power of price action in boom and crash, and then I gave out a call out on this trade boom 500, and I shared with some of us what to do with the trade, and then I talked about the lower highs and the lower lows we saw from our M15. You can see this. All right, when I saw this coming, I picked this trade. Yesterday the account was at 30, and you can see it's a real live account. So let me take you to the trade. You can see my account balance now is at what, 35, and you can see this trade I picked it today. Yesterday's trade from 30 to 33, and now the count is at 35. This is the power of trading a minimal lot size. And then you don't just trade a minimal lot size, you know that you have a healthy margin percentage, 3000, even though I'm trading boom 1000 and boom 500, but you can see the lot size is at 0.02, 0.02. You have a healthy free margin, and then your trade have a breathing space. And if you look at the trade successfully, 0.02 has given me $1.13. That is over 60 pips. 55 good pips. 55 clear, clean pips without stress, and the trade has been running for more than 55 minutes. So I will consider this trade as a day trade. Okay, so a day trader is somebody who allows his open position to run. One open position should run for at least an hour. Now if we look at this boom 500 precisely, this is where I picked the trade at 8755, and this is 8698. If you do your calculations, you get to realize that you have roughly 58 minutes of the trade running. Now, why did I decide to make this video? Because on Motivation Africa, that is the blog in which I publish, one of the comment sessions, a subscriber asked how he or she could day trade or swing trade boom and crash, and this video is made precisely for you. So today I will share with you some of the tips and some of the principles you should do. Now I want you to know that forex markets generally has made a whole lot of people scalpers because of the presence of the spikes in boom and the drops in crash. What do I mean by that? If you look at your M1, you will see all these long spikes here, like you can see here, these long spikes here. Yeah, and that has really made so many people scared of trading boom and crash, and for some people they don't even know how to start their trading adventure. Now today this video will help you decide on that. Okay, the first principle if you're going to be a good day trader is that you must understand what I call a good risk management skill. You must have a good risk management skill. If you look at this trade where I picked it at after the boom. I picked it up there, and then the market has run down. All right, any moment from now I expect a boom, and then it will still go down again. Okay, a good risk management. What gave me peace of mind when I picked this trade was because of the lot size that I used. If you check these trades, you can see my lot sizes are what, 0.02, and I talked about the importance of lot sizes yesterday. So if you want to watch the video, kindly go to Juve Trades. Just YouTube Juve Trades. Juve Trades is a new YouTube channel, and I'm trying to generate a whole lot of traffic there, so you can help me in doing that. Just YouTube Juve Trades. You'll see 2 videos. Just watch them. They'll be very good and they'll be helpful. Okay. In good risk management, I always advise traders to have this in mind, that the first thing you should always consider when you're placing a trade is your equity, your equity. Like I said yesterday, I started growing this account when it was at $10. That was last Monday, and I have not traded every day, but this is the lot size that I've been using, and you can see from $10 to what right now is at $35. You can see how much I have made. $25 profit in just 9 days. That is, I have doubled my account in just 9 days using what 0.02. A whole lot of people will say 0.02 is too small, and what I often tell them is that if you despise the little that you have, you may not really get the best of the best days. So for any account that is less than 30 USD, use 0.02. If you have an account that is up to 50 US dollars, you can use 0.03. For a $100 account, I would suggest you use 0.05. And for accounts that are above $100, use your discretion. But no matter what, pick a good risk management that you know you'll be able to endure the drawdown if peradventure the market goes against you. Okay, now if you are also having challenges on how to adjust these lot sizes to 0.02, you can also refer back to my videos like I talked earlier about on Juve Trades. The videos will be a proper guide to you. Yesterday, one of my students didn't know about this, and then he asked the question how I can adjust the lot sizes, and I referred him to the video, and he tried it and it gave him the result. Also, I also have a YouTube channel still there over there, the YouTube, so you can click and then join my free I also have a Telegram channel, so you can click there and join my Telegram group. All right. The second principle I want to talk about is for you to understand the market structure. I talked about market structure extensively on price action analysis for boom and crash. Is another video of mine that I have still there on YouTube. You can watch it. And to do a quick recap, I talked about that market structure is all about knowing what we call market trend. And there are 2 types of market trends. We have uptrend, downtrend, and then the next one we can consider is a range or a flat, or people call it a consolidation. Now, when the market is on an uptrend, I always advise people to look for buy opportunities, and if the market is on a downtrend, I always advise people to look for sell opportunities. What is an uptrend structure? An uptrend structure is like this, where the market creates higher highs and higher lows. This is your higher high, and this is your higher low. This is your higher low. This is your higher low. Your higher low can serve as your support. Your higher high can serve as your what? Resistance. All right. Okay. Now, a downtrend is a type of trend in which the market makes lower highs and lower lows. Okay. Like in this case, this is your lower high. Sorry for this. This is your lower high, and this is your lower low. Now, I picked this trade. If you looked at it, the market gave a little consolidation around here, but then it gave us a downtrend here, 1, and then gave us a little correction, 2. So I picked this trade at the tip of my lower high for a sell down, and you can see the downward movement. It is this single trade that has given me over $1.25. See there. All right. Okay. Now, when you understand your market structure, or what I call market trend, it gives you rest on how to trade in a more relaxed manner. It gives you rest on how to trade in a more relaxed manner. Yes, this is another trade that I've picked on Boom 1000. All right. Now, I picked this trade because of the candlestick pattern that I saw here. That is why I picked that trade. this candlestick pattern here. So for some people that are candlestick traders, this is what we call evening star. It is also a price action trading strategy. This is your evening star. So you can check that out on one of the videos that I'll talk about on candlestick patterns in boom and crash. Now, the third principle I want to consider is your entries and your exits. As a day trader, I always tell people that the success of your trade to a great extent depends on your entry and your exit. This is because whether you are an instant executioner or you are a pending other type of trader, your entry should determine your confidence level in trading. What do I mean by that? If you know that your entry for a particular trade is not commensurate with the risk reward ratio, you shouldn't pick that trade. That is, I am so particular about this because there are so many trading opportunities that will present themselves to you. So many trading opportunities that will present themselves to you. But when you have a good consideration of your risk to reward ratio, relating it to your entry and your exit level, you get to realize that most of those trades are as good as being traps. So I picked this boom 1000. If you looked at it, my stop loss zone was at 11748, whereas I picked the trade at 11342. So I gave myself a 16 pip 16 pip risk ratio, and I'm looking at exiting that trade somewhere at this point 11652. That's over 100 pips. That's over 100 pips, or close to 100 pips. So if you look at the risk to reward ratio, it's almost 1:9. Yes, 1:9. Why am I telling you this? Because your entry matters as well as your exit. So if you want to pick up a trade and then you look at your entry and then you don't have a tighter stop loss, I always advise people, do not. Another reason is because you are going to day trade the market, and you must allow the trade to run for at least 1 hour. So your trade will need a breathing space. Your trade will need to run and relax. You don't need to jump in and jump out. If you jump in, you will definitely jump out. Boom and crash is so merciless, it will make you jump out. So why am I taking out time to talk to you about how to swing trade and how to day trade? The reason is simply because you need this knowledge to be a success in the market. All right, you can see my trades, just two trades have given me $1.54. If you are consistent, if you are patient, if you are willing, you can make it happen to you. Yesterday the account was at 30, and look at today is what, at $35.41. This account will continue to grow to millions of dollars, and I'm going to take out time to grow it, and I'm going to teach you how to do it. So if you are willing to ride this journey with me, kindly go to my YouTube channel, Juve Trades, subscribe to it, be watchful, just watch the videos. I'll take you through. It's still the same account that will be growing, and then we'll be making withdrawals. So watch the videos, follow me. You can follow me, you can check out my Telegram group. My Telegram group is there. You can sign up there, and then I'll be having a class with you, and once in a while we'll be taking trade opportunities. It's an opportunity for you to get to become a success in this market. Another thing is that if you do not, I repeat, if you do not know how to trade boom and crash, and you would like me to be your life coach, I am ready and willing to put you through. So if you want me to be your life coach, kindly send an email to me at juvetrace@gmail.com. I'll reply and respond to you immediately, and then we will get started. As you keep to these principles and as you study more, I see you on the blue sides. You know what I mean, the winning side. Have a good time.